Mark, we've been busy worrying negatively about what's happening with the AI trade just in the last couple of minutes. But actually, let's put all that to one side because, you know, stocks at records, the S&P, the Dow, the DAX, the Stock 600, all at records in the past 24 hours. Is it all about the weaker oil price? Is that all it takes?
I think about 50% of the euphoria in markets this week is probably around optimism about US-Iran. And there definitely is euphoria. As you say, stocks are at records. You know, almost every asset's doing well. Bonds are rallying, which is playing into the stock story. So I'd say about 50% is US-Iran, even though we've been here before. And it's precisely because we've got deja vu about the situation of a promise of a deal that's holding some investors back, which means we still probably have even more upside if there is finally a deal which seems viable and sustainable and is actually validated on both sides. What's the other 50%? I think the other 50% really is largely just kind of technical relief that the rout in Korean stocks is over, that the situational awareness fund is kind of resolved, and then we've rolled into a new month and we can kind of put July behind us. So I think 50% is that and 50% US-Iran optimism.
So then, Mark, has the S&P turned a corner now it's out of the narrow range it was stuck in for several months?
I mean, look, S&P 500 never went far from its record highs, even in July turmoil, which was very much sector specific. S&P 500 has been doing fine all year. I mean, I think we remain in the inflationary stage of the AI capex bubble, and we remain in an overall very bullish environment for stocks. We've got massive fiscal injections from around the world, both from the private sector and the public sector. We're having monetary policy being held inordinately low. We keep on getting promises of relief in US-Iran, which is the one big risk out there. Earnings are incredibly strong. So the macro environment is still very, very positive. As we've discussed since about May, I think we're in this more volatile stage of the AI kind of bubble. And therefore, but that still means higher prices. So, you know, look, S&P 500, yeah, it hasn't gone much further, but it's not far off record highs, which is, you know, is extraordinary gains the last couple of years.
Mark, are we still adjusting to what we heard last week from the Fed, do you think? You think it's still working through markets, the lack of guidance that we're getting? And what is that doing, do you think, to risk assets as well as to the long end of the yield curve?
I'm not sure we're still kind of working through it, but I think that the message from that meeting is going to remain very relevant. And, you know, for the long term, one is we're going to have more volatility around data points, which is one aspect. And because we got some big data points to come this week, with jobs in particular, that's going to be interesting. And I think the second one is that because of that kind of slight surprise in how dovish war sounded in the conference relative to expectations, I think that the next data points in particular will either kind of validate that view or make it seem more like a policy mistake if the data is strong.